In March 2020, as the world locked down and markets crashed, the Federal Reserve did something it had never done before. It announced it would buy corporate bonds, directly propping up private companies. But almost no one noticed a crucial detail. The Fed didn't buy these bonds themselves. They hired one company to do it for them. One company that would decide which corporations were saved and which were not, effectively picking the winners and losers in the largest market intervention in American history. That company was BlackRock. And the fee they charged the Fed? Zero. They did it for free. When the world's most powerful asset manager offers to work for nothing, you should be terrified. Because what they get in return is far more valuable than money. BlackRock manages $10.5 trillion in assets. That's more than the GDP of every country on Earth except for the United States and China. They own a piece of nearly every major company you interact with daily: Apple, Microsoft, Amazon, Google, JP Morgan, Exxon. But it's not just their size that makes BlackRock so powerful. It's their proprietary system, a piece of software called Aladdin. Aladdin isn't just an app. It's a super intelligent risk management system that controls $21.6 trillion in assets. That's double what BlackRock officially manages. The world's biggest banks, insurance companies, pension funds, and even governments use Aladdin to make their investment decisions. This means one single system can see almost every major trade before it even happens. That concentration of power is staggering. BlackRock isn't just managing money. They are fundamentally reshaping capitalism itself, slowly shifting wealth from individual ownership to institutional control. Founded in 1988 by Larry Fink and 7 partners, BlackRock wasn't just another asset management firm. It was a technology company disguised as one. Fink had learned a hard lesson back in the 80s when his trading desk lost $100 million overnight. He realized that whoever controls risk management controls everything. So when he started BlackRock, the real product wasn't investment advice, it was Aladdin, a system that could predict how any portfolio would perform under countless different scenarios. Early on, they sold Aladdin's analysis to other financial institutions. This gave them an unbelievable advantage. They could see what their competitors were buying and selling. It was like playing poker with the ability to see everyone else's cards. By 1999, BlackRock was big, but not dominant. Then came the acquisitions. In 2006, they merged with Merrill Lynch, adding $1 trillion in assets instantly. In 2009, after the financial crisis, they bought Barclays Global Investors, adding another $1.5 trillion and, crucially, gaining control of iShares, the world's largest platform for exchange-traded funds, or ETFs. These weren't just about growth, they were about capturing the infrastructure of investing. Today, most people invest through ETFs, and through iShares, BlackRock controls the voting rights of millions of shares. They influence corporate decisions on behalf of investors who don't even realize it. Today, BlackRock's $10.5 trillion in assets is only half the story. Thanks to Aladdin, their influence extends far beyond that, with over 240 financial institutions using it to manage a combined $21.6 trillion. Every single day, Aladdin analyzes 250 million trades, overseeing the risk for your pension fund, for sovereign wealth funds, and for central banks. Whenever there's a crisis, governments turn to BlackRock. In 2008, they were hired to value the toxic assets of Bear Stearns and AIG. In 2020, when the Fed needed to buy corporate bonds, BlackRock selected the bonds, executed the purchases, and managed the portfolio. They essentially became the government's outsourced investment arm, and again, they did it for free. What they gained was priceless: early access to government policy, influence over which companies got bailed out, and the ability to position their own funds before the public knew what was happening. But the real wealth transfer isn't happening in bailouts. It's happening in the quiet, systematic shift from individual to institutional ownership. After 2008, BlackRock identified single-family homes as the next big asset class to financialize. From 2020 to the end of 2021, institutional investors bought over 500,000 single-family homes, not to live in, but to rent out forever. Companies like Invitation Homes and American Homes for Rent led the charge, and who are their largest shareholders: BlackRock, Vanguard, and State Street. In some cities, institutions now own over 40% of all rental homes, systematically outbidding individual buyers with all-cash offers. As a result, homeownership for Americans under 40 has plummeted. It's not because young people don't want to own homes. It's because they can't compete with institutions that have unlimited capital. This pattern extends to corporate ownership too. As of today, BlackRock, Vanguard, and State Street collectively are the largest shareholders in 88% of the S&P 500. Think about that. When the same handful of institutions own competing airlines, drug companies, and media conglomerates, what incentive is there to compete on price or innovate? Research shows that in industries with this kind of common ownership, prices are higher, innovation is lower, and wages are stagnant. ESG investing, environmental, social, and governance, only amplifies this power. As the leader in ESG funds, BlackRock pressures companies to adopt its preferred policies, threatening to vote against management if they don't comply. This allows them to shape corporate behavior on a massive scale, all without any public accountability. It's a process that favors massive corporations that can afford to comply and crush small businesses, further entrenching institutional dominance. Aladdin pours fuel on this fire. When hundreds of institutions managing trillions of dollars all use the same risk model, they tend to buy and sell at the same time. This creates a fragile system that looks stable on the surface, but can lead to lightning-fast crashes like we saw in 2020. And because Aladdin sees trades before they happen, BlackRock has a structural advantage in the market, all without ever breaking the law. The line between BlackRock and the government has become dangerously blurred. Executives frequently rotate between the company and high-level positions at the Treasury and the Federal Reserve. During the 2020 corporate bond bailout, BlackRock used government money to buy bonds in companies where its own funds were major investors, effectively propping up its own holdings with taxpayer backing. When one firm's interests align with nearly everyone else's, the very concept of a conflict of interest disappears. This isn't capitalism as we know it. It's something else: corporatism, stakeholder capitalism, or be even neo-feudalism. The core idea is that you no longer own assets. You rent access to them from giant institutions. Your home, your stocks, your retirement, everything is managed to maximize institutional returns, not your personal wealth. You might remember a promotional video from the World Economic Forum that famously said, "You'll own nothing, and you'll be happy." This isn't a distant future. It's the model already in motion. We are becoming a society of renters, while a financial elite concentrates ownership of all productive assets. The winners in this new system are the institutional investors and the ultra-wealthy. The losers are anyone hoping to build wealth through ownership. Young people priced out of the housing market, small business owners who can't compete, and even you whose retirement funds are being used to finance a system that limits your own family's ability to own things. And it doesn't stop with housing. BlackRock is now targeting infrastructure, water systems, toll roads, power grids, and ports. Public assets, built over generations, are being sold off to private investors who will charge us fees to use them forever. Why? Because governments are drowning in debt and see it as an easy way out. The end game is total institutional ownership of all essential resources. BlackRock isn't evil. They are simply rational actors, maximizing returns within the system. But the system they are building, one that systematically undermines individual freedom and prosperity. The path forward requires us to be aware. We need to demand policies that limit this extreme concentration of power. We need to support politicians with the courage to challenge this new financial order. This transformation from an ownership society to a rental society is happening quietly, one asset class at a time. By the time it becomes obvious, it may be too late. The question is, will we recognize what's happening in time to stop it? Or will we wake up one day to find we truly do own nothing? Thanks for watching. If this video opened your eyes, please share it and subscribe for more content that matters.